Hi, guys. Thank you for joining us today for part 4 of our 4-part webinar series, helping investors build a strong foundation for investing in real estate syndications. In today's webinar, we will be reviewing a full cycle case study, a real-life example of the most recent sale of one of our portfolio assets, where we transformed the property from Bella Vista to Midtown on Seneca. You should receive this recording if you have registered. If not, please reach out and we will get them to you. If you have any questions, go ahead and pop them in the Q&A box and we can answer them at the end of the presentation. A little bit about us. Break of Day Capital is an experienced value-add multifamily operator focused in the high-growth markets in the Southwest, having acquired over 1,300 apartment units, representing over $250 million in transactions. Our mission is to deliver superior risk-adjusted returns to our investors while safeguarding their precious capital and provide quality communities for our residents that positively impact their lives. The American Apartment Owners Association named us the best real estate syndication company in 2022 for our asset management expertise. We are grateful for the recognition, and it is a testament to our strong focus on operations. A little bit about me. I've been an active investor in residential and small multifamily rental since 2003, having benefited from the price appreciation going into the 2006 bubble and surviving the subsequent crash during the 2008 Great Financial Crisis. Since 2017, I've also been passively investing in a variety of commercial real estate syndications, including 6 deals with Break of Day Capital as a way to scale our real estate portfolio, leveraging experts in different markets without taking on more landlord duties. Prior to focusing on real estate full-time, I spent over a decade in the traditional investment management business with multiple market cycle experience. I love to talk about all types of investing and in particular multifamily syndications. As Director of Investor Relations with Break of Day Capital, my goal is to share my decades of investing experience to help as many investors as I can in their journey to financial freedom. TUCSON. As mentioned in the second webinar, evaluating the sponsor and the deal. It is important to invest in the right MSA submarket where the asset is located. Tucson is a market that we really like. When Phoenix got pricey a few years ago, we pivoted to Tucson. The properties are not as picked over as in Phoenix and not on many sponsors' radars. Tucson is the second largest city in Arizona, and the MSA has over 1 million people, which is pretty sizable. It has a diverse employment base ranging from the university, medical center, Air Force Base, aerospace, tech and biotech companies, county and state, Customs and Border Patrol, retail, and copper mining, just to name a few. There's also Lucent Motors, Nikola, Procter & Gamble, and Kohler setting up large operations in smaller towns in between Phoenix and Tucson. The below average cost of living is attractive. There are many renters, and there has not been any meaningful development of multifamily units, keeping supply on the very low side. We saw one of the highest rent growth in the country over the past 2 to 3 years. Midtown on Seneca, formerly known as Bella Vista, fits well in our buy box and is a 1972 vintage apartment complex with 176 units, where we took it from a Class C- to a C+ condition. As with most repositioning, the business plan is to burn off loss to lease or to bring property closer to market rate rents by making exterior and interior improvements. In addition, we would also look for ways to reduce operating expenses to drive net operating income further. The plan called for rebranding, updating the remaining 2-bedroom units with new fixtures, appliance package, and flooring as needed, fixing deferred maintenance, and adding covered parking. We would also replace the chill and boiler plumbing, change to a desert scape, and optimize payroll to reduce operating expenses. One thing to note here is that one of the benefits of using third-party property management is that we can both independently come up with the pro forma and CAPEX projects and then compare notes. This way, you have another set of eyes on the business plan. The particular property management company that was at Bella Vista is known for keeping occupancy super high, close to 100%, which suggests that the rents which suggests that the rents are well below market, and there's an optimal balancing point where you push rents while maintaining reasonable occupancy rate, which is around 92 to 95%. Here is an illustration of the CAPEX projects that we came up with. We budgeted generously for the various CAPEX projects, and in most instances, the actual cost came in at or under projections. Two big things to highlight here. One is that the cost of exterior painting ended up being double of what we budgeted because we had not planned on painting the entire complex originally. We ended up reallocating the budget from covered parking because the new paint really gave the property a nice pop. The landscaping cost came in over projected because we underestimated what was needed to get the look that we were going after and had to increase the scope of the work to get it dialed in. Something that sometimes we do end up going over budget on some items. Here are some before and after images of executing on our business plan to improve the look and feel of the property. Rebranding with new signage, new exterior paint scheme, and improving the landscaping goes a long way to enhance the curb appeal. Changing the name from Bella Vista to Midtown on Seneca gave a broader appeal and a more contemporary look. Repainting the awning is an inexpensive way to freshen up the pool area, and covering the kiddie pool and replacing with barbecue grills was more cost-effective and practical. Here you can see the updates made and the staging done to the model unit to give it a more contemporary look, which provided a stronger impression to prospective tenants. Here you can see in the last picture that the improvements really enhances the curb appeal and attracts prospective tenants. Rent performance. Here you can see how the actual rents achieved at the time of the sale exceeded even beyond our own projected market rents, which was already $100 to $200 higher than actual rents at the time of purchase. The outperformance exceeded projected rents by an additional $223 to $251, or 17 to 30% higher depending on the unit mix. You can see from these metrics that the business plan translated well into adding value or forcing the appreciation on the property. Struggles. This was definitely one of our most difficult properties to operate. We faced several issues. We had to clean up a very rough tenant base, think of guns and drugs, by evicting criminal elements. We had staff turnover 1 year into owning the asset, and leasing slowed and bills were not getting paid as a result. Staff left for higher pay and probably being burnt out from dealing with our specific tenant issues. We also ended up switching the property management company as we were not happy with the regional managers. At times, we had vacancy and staffing issues and tried different solutions to work around these obstacles. During the sale, we had to deal with a fire in a couple of units and repairs that kept popping up. Finally, the institutional buyer that we contracted with was very difficult to deal with. We never really had the confidence that the deal was going to close. It seemed like they made requests every day and wanted a huge credit in light of the rapidly tightening interest rate environment. So this was during the summer of 2022, where buyers were retrading and lenders were pulling out the day of closing. Wins. We bought the property in December of 2020 for $13.6 million, or roughly $77,000 a door. It's very unlikely that we'll see those prices again. We had negotiated a $1 million price reduction by assuming the seller's loan and helping them avoid a big prepayment penalty, knowing that the prepayment penalty would burn off during our hold period. We then put on a supplemental loan to bring leverage up to an optimal level, and even added an institutional preferred equity partner at a fixed rate. Their cap upside meant more potential profits could go to our limited partners. As mentioned earlier, the Tucson MSA is a good growth market with strong fundamentals and benefit from market tailwinds. We had great staff in the beginning that were really good before they got poached or left from being burnt out. And then our focus on operations, trying different solutions, pivoting as needed, and overcoming challenges to its successful exit clearly was one of the wins. full cycle performance. So here you will see that we ended up selling the property in August of 2022 for $28 million or $159 per door. And you can see the final outcome. These are results net to investors, net of all fees. So here you will see 101% internal rate of return versus 18% projected, 3.0x equity multiple versus 2.23x projected. And then this was over a 20-month hold period versus 60-month projected. If we could have sold sooner, and if it wasn't for having to give the buyer some credit, the equity multiple could have been in the 3.6x to 4.x range. Now, I should caution you that these are not normalized returns, and we would never underwrite these types of projections, but they are possible. So to highlight, the assets certainly benefited from favorable macro tailwinds, including a Fed that injected a ton of liquidity into our economy and artificially depressing interest rates close to 0% for an extended period of time, causing all asset prices to go up. But the work that we put in to reposition the asset increased rents by $230 on average, or an increase of 29 to 46%, depending on unit mix. And with cost savings from reduced landscaping, utilities, and payroll expenses, we increased the net operating income by 44%. I also want to mention that while it's great to deliver strong risk-adjusted returns to our investors, we also enhance the quality and safety of the community that positively impacts our residents' lives. This is a win-win situation that motivates us to stay true to our mission. To recap, today we discuss a real-life example of one of our recent full-cycle exits and highlighting the struggles, wins, and final outcome. Hopefully, this will provide you with a better illustration of the life cycle of a value-add business plan. The biggest takeaway here is that things will never go according to plan, and that is acceptable. It is the operator's ability to deal with and overcome obstacles, both projected and unexpected, that is the biggest differentiator in delivering a successful outcome or even outperformance. If you found today's webinar helpful, come join us next Tuesday for a bonus episode where we will have a guest speaker from Preferred Trust Company to teach us how to invest with self-directed IRA money. A little bit about Preferred Trust Company. A shout out to one of our preferred partners. Give them a consideration if you're deciding to open a self-directed IRA, which is a great way to invest in a broad variety of alternative investments. Here's my contact information. Please feel free to contact me if you have any questions or just want to talk about investments in general. I'm always happy to help in any way I can. You can email me directly at joseph@breakofdaycapital.com or scan the QR code on the screen and it'll take you to various contact pages. With that, that concludes our webinar for today. So I'll give it a couple of minutes to see if the audience has any questions. And like I said, if you can think of anything later, if there's anything you want to get into in any of the slides that were presented today, feel free to email me if you think of them at a later time. But I'll give it a couple of minutes to see if there's any questions. Okay, I don't see any questions. Like I said before, go ahead and email me at joseph@breakofdaycapital.com, and I'm happy to just have a chat with you. Okay, well, thanks for your time and have a great day.